This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performances do not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk. There's always the potential for loss. Your trading results may vary. No representations are being made that any software or training will guarantee profits or not result in losses from trading.
Good afternoon, traders. I'm Daryl Richburg, and this is your market route for March 14th, 2007. In the news today, the Commerce Department reported the imbalance in the current account jumped by 8.2% to $856.6 billion, representing a record 6.5% of the total economy. For the fourth quarter, the deficit shrank by 14.6% to $195.8 billion, the smallest quarterly imbalance since the summer of 2005. The concern is that if the foreigners lose their appetite for U.S. investments, it could cause a big plunge in the value of the dollar, send stocks crashing and interest rates soaring. The prices of goods imported to the U.S. rose 0.2% in February, pushed higher by imported petroleum and natural gas prices. It was the smallest increase in import prices since October. Economists surveyed were looking for a much larger 0.7% gain. Meanwhile, prices of U.S. goods exported rose 0.7% in February and are up 4.7% in the past year. The increase in export prices indicates that the weaker dollar could be helping U.S. producers raise their prices without losing market share, but the weak dollar is not having much impact on import prices. Oil prices fell after government reports said supplies of crude oil rose less than expected, but the fall in gasoline stocks is less than thought. In its weekly inventory report, the Energy Information Administration said crude stocks rose by 1.1 million barrels last week. Analysts were looking for a gain of 1.6 million barrels. Gasoline supplies dropped by 500,000 barrels, while distillates used to make heating oil and diesel fuel fell by 2.8 million barrels. OPEC is unlikely to change output levels when oil ministers of the 12-nation organization meet this week. This according to senior Kuwaiti and Libyan oil officials that reflect producer satisfaction with present prices. After two cuts in the 4 preceding months, the likelihood of OPEC doing nothing makes sense from the viewpoint of the 12-nation organization, a stance reflected in a series of recent statements by oil ministers of member nations. With fixed mortgage rates falling to the lowest level in 3 months, the Mortgage Bankers Association reported applications for loans at major U.S. lenders rose to the highest level in 3 months last week. Total applications, including purchase loans and refinancing loans, increased 2.8% week on week and were up 19% compared with the same week a year earlier. Citigroup plans to increase its China headcount by 1/3 in 2007 as it opens new branches and boosts its small and medium-sized enterprise business. The bank will also reportedly launch Citigroup China Company Limited, its planned domestic subsidiary, soon. In a related development, Citigroup Inc. sweetened its offer for Japanese brokerage Nikko Cordial to 1,700 yen per share, an increase of 26% from its earlier offer, bringing its total bid for all outstanding shares in the group to $13.4 billion. In earnings news, General Motors Corporation reported a net profit of $950 million for the fourth quarter of 2006 due to cost cuts, higher automotive revenues, and a gain on the sale of its finance division. It was a turnaround from a $6.6 billion loss in the same period a year ago. The results, excluding items, fell short of Wall Street expectations for the quarter. Lehman Brothers Holdings said robust trading and overseas expansion drove record first quarter results that matched Wall Street expectations. Quarterly profit after paying preferred dividends rose to $1.13 billion or $1.96 a share from $1.07 billion or $1.83 per share in the year ago period. Revenue grew 13% to $5.05 billion from $4.46 billion a year earlier. Until next time, this has been Daryl Richburg with your Market Wrap.